Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. Have we got an episode for you? We're interviewing Cale Johnson, the founder of Onsetto, about his experience building his second fintech and all of the lessons he learned after founding ClickSwitch and what he has brought forward to the new company and how it's making a difference. This is one you will not want to miss. So if you're ready, let's suit up and get out on the field. Cale, welcome to the show. Thank you very much for joining us. Why don't you tell our audience a little bit about yourself and your new company, Onsetto?
Yeah, so Onsetto is my second fintech company I started back in 2014. The first company I started was a company called ClickSwitch, which was out to solve the consumer switching dilemma, where banks and credit unions were investing in digital account opening. And as account opening became easier, banks and credit unions were sitting on more stagnant checking accounts on the retail side. So we built a product that came in right after a new consumer opened an account and really held our hands to get them switched over, focused around getting the direct deposit switched over, recurring payments, delivering a primary and profitable account on the consumer side. Fast forward to what we're doing now. Back when I had ClickSwitch, banks would always ask, hey, can you do a commercial account? Can you switch commercial? The answer was always no. ClickSwitch got acquired in 21 by Q2 down in Austin. I stayed on there for 2 years, and same question would be asked, can it do commercial account switching? The answer was no. Took some time off for a couple of years, looked at the industry, and still nobody was doing commercial account switching. So round two with Onsetto, we're out to solve commercial account switching. So right after a new business opens up their new account, we're coming in and we're helping that business get switched over, helping them get the account properly funded to their new bank, get all their AR, account receivables, accounts payable, and payroll, the four main pillars, so our customers can start to identify primacy on getting a commercial account switched over.
So you faced this dilemma as a founder where you had this really successful product, right? ClickSwitch is amazing. Yet you still had people saying, well, can I do more? Can I do more? Can I do more? How did you think about, balancing that request versus the core business of what ClickSwitch did?
Yeah, on the ClickSwitch side, we had about 600 financial institutions when we went to go sell the company. And so in the early days of ClickSwitch, the early credit unions or banks that you bring on, they're helping you steer your roadmap and say, hey, if you could put a button here, if you could put this feature here, we might buy it. And you're just like focused, yes, we got to do that so we can get it sold. Right. Once you get bigger, you have 300-400 institutions that are your customers. It's really hard to innovate and continue to go because you're constantly fixing bugs and you're doing this and that and you're working on API integrations and working on online banking integrations, account opening integrations. You're doing all this and you kind of lost track of your core functionality and the product that you built. So switching gears with Onsetto right now, we're at the early days where we're really partnering with institutions that are helping us steer our roadmap. And it's nice to be nimble again and say, hey, if you could add this feature or functionality, we would be interested in moving forward. I like this part. I like the early days of the company. Once you get big and you have a few hundred institutions and they're trying to steer your roadmap, it becomes really hard to move in advance at that stage where you have, a few hundred customers asking for features and functionalities. You're just, what is the priority? It's hard to decipher.
What are the unique challenges that Onsetto is helping institutions meet as it relates to the switching of business accounts or the onboarding of business accounts?
Yeah, I think for decades, banks and credit unions, they're trying to win on commercial relationships based on rates, treasury services, or digital services. But really, what we've figured out is the fundamental issue is you can offer all those things at a very competitive rate, but it's really hard to get the business to actually switch over because they're leaving the bank or the banker meeting and saying, I just don't want to deal with the complexity of switching. So we're trying to address the biggest bottleneck, which is all of these banks are competing on rates and treasury services and digital services. But if you can go in there and say, we're the easiest bank to switch to because we'll help you get switched over when it comes to getting all your customers notified to make payments into the new account, all your merchants updated to get pulled out of your new account, and helping you get your payroll set up. So we're trying to address the biggest bottleneck, not necessarily, it's no longer account opening because they got that figured out. Commercial account openings really scaling and doing great. But I think, our customers, they're sitting on more stagnant business accounts than ever. And what's happening is, banks or businesses are saying, yeah, I'll open up an account with you if I can get this rate. And then the bank's saying, I can get you that rate if you move over your primary account to us. And they're saying, yeah, I'll do that. Well, they get the rate, they open the account, and then the account sits stagnant because they already got the rate. So we're trying to give the banks a competitive playing field now and saying, we got to get you switched over. You said you were going to do it. We have this tool we're offering you now to make it very seamless to get switched over to us.
So how would you describe the phase of where the company's at today? You're live, you've got clients. What type of results are you seeing?
We are live. We have clients. We're in go-to-market mode right now, trying to get this out in front of as many financial institutions as possible, whether it's on the credit union side or the community bank side. When I went out to build Onsetto, we partnered with a few pilot institutions because I wanted to make sure we were solving a real problem. Because I think so much in fintech right now, it's like, do you have product market fit? And just because a bank is like, hey, I think this is a bottleneck in the industry, or if I think this is an issue, you can go build it, and will somebody really want to buy it? Like you don't know. And so when we were trying to identify our pilot banks, I wanted to make sure we were truly solving a problem before we brought it to the market. And we got it to that point where, all right, I think we're onto something real. I think we're really addressing something fundamental. And now we're out there, it's live, and we got to scale and start bringing on as many banks and credit unions as possible.
What type of impact can a institution expect to see by leveraging Onsetto to help onboard their new business clients?
Well, one, you're going to see a lift of getting the business actually switched over and using their new account. So many banks right now are sitting on zero balance accounts, where because account opening has become easy on the commercial side, like I said. But a lot of times when you open the account, there's some sort of funding initiative, whether it's $50 or $100 or some sort of, you have to put in a balance of somewhat. And then that's what the bank ends up sitting on because the business never comes back to switch over all their AR, AP, payroll, and fund the account appropriately. So we're actually coming in now right after they open their account to get them to fund it appropriately, get their customer deposits to start hitting their new account. And then you can start getting primacy. That's the one thing ClickSwitch figured out, I think, early, is if we could get a consumer's direct deposit switched over and funding the new account, that consumer has to switch over everything else because there's nothing funding the old account. If we can bring that same logic on the commercial side and getting all those customers who are making payments into that old account to reroute it is to start being paid into the new account, they have to switch over all their AP, payroll, everything because there's no longer, they're no longer funding that old account. So we try to use some like historical logic about when ClickSwitch first started to take off is, okay, we got to, direct deposit switching became a huge thing. Bringing that same logic on the commercial side has helped us drive some primacy for our institutions. But the one thing we're still trying to figure out is what's all the downstream lift that we're going to drive? Is the new business 5 times more likely to activate their virtual card or their credit card with the bank, or are they 10 times more likely to restructure a line of credit with that institution? What does primacy bring on the commercial side? So our early banks that we're working with, we're trying to carve out all those ROI metrics, which helps sell this opportunity as we move forward to different credit unions and banks down the road.
Were there unique technical challenges trying to integrate and support the onboarding of businesses versus consumers?
It's a completely different beast. when you're doing with the customer, it's one direct deposit and some recurring payments. When you're
Right.
switching a small business, you have that small business or that commercial business may have 200 customers that are making a deposit into that old account that you have to get set up, and then you think
Right.
about all the accounts payable that you have to reroute. So it's way more complex, and it took
Mm.
years to build ClickSwitch from a database standpoint.
Hmm.
The one thing about technology and moving so quick with AI, I think you can build things pretty quickly now.
Hmm.
But how do you deploy that? How do you keep iterating off of that? Is something that we're going to have to continue to drive innovation moving forward. Because what's great about AI is you can build things really quick, but competitors could also build things really quickly as well. If they see that you're onto something, or they see that you're doing something that
Yeah.
banks are moving forward to, they're likely going to adapt and try to do the same thing. So what we're doing from a technology standpoint, we're trying to position ourselves to be light years ahead of competition for years to
Right.
come. And that's where I'm thinking about how we're deploying this and how we're building the technology is how do you make it more defensible? That's been in my head because ClickSwitch was great, but as soon as we started to hit the market and we started to go through big growth in 2019, 2020, all this competition came. Payroll APIs came, direct deposit switching came. Everybody, you could throw a rock and hit three companies. So understanding that on the commercial side, I'm looking
Yeah.
at just how can we put an iron fence around this and go to market and land and expand quick and be defensible from a technology standpoint.
It's an interesting. So let me pick at that for a second. So as you're making investments now, right? You're live. You've got product market fit. You're rolling out as many institutions as you can, engaging us, which is fabulous. As you think about building a defensible solution, are you
Mm-hmm.
making investments more? Do you think investments in infrastructure or features make it more defensible?
I think both. We have a lot of conversations of, if we build this way, how much of a runway do you think we would have from a competition standpoint? And my CTO would say, you probably only have 3 to 6 months if you build it this way, but we could get it to market. If you build it like this and you deploy it like this, I think you have years of runway to do it from a competitive differentiator. So that's the
Mm.
way we look at things now because we are kind of embarking on a new market. Commercial account switching is going to be brand
Right.
new. If you see fast adopters on the bank and credit union side, you're going to
That's
try and
right.
see fast followers. So it's been a lot of decisioning around how we build the technology from a feature standpoint, how we deploy the technology from a functionality standpoint, and how can we create something that will give us longevity in the market.
You talked about your team. Did you leverage the relationships that you had previously? Are you getting the band back together, or
Yeah,
did you look at the kind of the new needs and the emerging technologies and decide, you know what, I need to get some new players on the team?
the team that essentially landed the plane and got acquired by Q2 is basically the team that, from a technology and product standpoint,
Hmm.
we're building Onsetto with. All
Gotcha.
the sales individuals and account managers and marketing, they have a nice home over at Q2, and that's great. But from a product and technology standpoint, I think when you have this like entrepreneurial drive, you want to constantly be building. And oftentimes when you get bought by a big company, they're not
Yeah.
innovators from a product standpoint.
Sure.
Those that were on the ClickSwitch team that left you 2 years ago, we're back together going after this commercial account switching. So like Rob Zwink, who is our CTO, he's great. He's working on from a technology standpoint. Jordan
Hmm.
Lemansky, who ran product at ClickSwitch at the end, he's back with me. So you kind of see the team that really understood how to scale, how to grow, what
Yeah.
technology you should be investing with. Those are the individuals that I tried to start the company with when it was time for round two.
Now, my guess is, if you think back about the team you had when you founded, the original company, it ended up being a different team. What lessons did you take as you talked about how, you're kind of moving from starting to scaling now, right?
Yeah.
How did you incorporate the lessons you learned in the plan as you were rolling out and figuring out how you were going to go to market?
Yeah, I think the when you start a company, and this is what's interesting with ClickSwitch, the individuals who are at that table were not at the table when we went to go sell the company. It was a whole
Right.
new skill set, a whole new group. I was really the only one that was still there. But over that 8 years, I really had to adjust and become a chameleon and keep going and try to fit
Right.
in. And because I was a 26-year-old when I started ClickSwitch. And so once we start to get going, I was 30 years old. And, when we put our executive team together, a lot of people have been in the industry for 20 years, and so I had to continue to figure out ways to advance my skill set as well from a leadership standpoint and what does the company need. And, so when we went to put this together, one of my biggest, I think people have different skill sets. And when you're a company with $20 million in ARR and you're trying to get it to $30 million, that's a unique skill set. But when you are going from 0 to 1, that's also a unique skill set that you have to hone in on. So I challenge our current team that says, you're not a $20 million company. You're a $0 company. And we have
Stop
to
buying every product off the shelf.
Exactly. Yeah. Stop turning all the levers up and on AWS. We can't afford that right now, And so, it's a different skill set that I think you're constantly, you have to look for that from an early stage to where your company needs to go.
It's great insight. How do you know now, especially with the availability of AI? You mentioned AI and the ability to develop things in a little bit faster way. How do you know now when it's the right time to add somebody to the Onsetto team?
That's a good question. We have our core folks right now, and we're getting it done with our core folks. But I just walked out of a meeting this morning with a local bank here in Minneapolis who was asking for different features and functionalities. And as I'm driving home, I'm like, we need to add more staff, to get this done and build. Because there is AI changes a lot, but the engineers that we have working on Onsetto are really good with AI. And so I think you have to know what you're doing. And I'm sure that's been pretty consistent with everybody that you're talking to. It's a tool, but it's only a tool that you could really utilize if people really know what they're doing. And the people that we have on the team right now understand it's an opportunity for us moving forward, not necessarily, is it job security? That's the other thing that you have to look at. But when it comes to adding staff, I think right now, instead of investing more in the product and engineering team, I think we need to invest more in the go-to-market strategy team and go-to-market from a sales perspective to get it out there. But when we had ClickSwitch, when we went to sell, we had 80 employees, and I bet 60 of them were developers. And
Really?
Right. It was very heavy engineering.
That's a very high percentage.
And I will not forecast that moving forward with Onsetto. I think I think we'll probably try to invest more in sales, account management, implementation management, fulfillment, and success. And I don't think we have to invest so much into development and engineer bodies.
If talking about engineering, that always brings up the question for credit unions about integrations, right? Talk to me a little bit about your integration strategy. What's necessary for a credit union from an integration perspective in order to use Onsetto?
So there's an out-of-the-box solution where it requires no integration to anything. And then you can kind of pick your poison. If you want it deeper embedded within online banking, we can do SSO, or you can put links depending on how customizable your online banking infrastructure is. I would prefer that it was a link or a pop-up or something within online banking. So the first time the SMB or commercial logs in, we pop up and say, now let's get you switched over. But if you don't want to deal with that, we can do it in a complete standalone fashion. Small business opens an account, they get a welcome email that says, congrats on opening your account, click this link and get switched over. The way we built this is completely white labeled. That's one big thing I learned from ClickSwitch is you have to white label things or else you see user drop off and customer abandonment. So Onsetto is the name of the company, but you won't see Onsetto anywhere. It'll be bank.switch.com, and they have this customizable business switching platform to get to. But we're trying to knock down any barriers or resistance to say no. And I think one of the barriers and resistance to say no is how much do I have to integrate this into all my other platforms, and what is the end cost then? If I can really sell this as a standalone solution, that's just one less resistance of why somebody might say no, is because I can live over here and drive switches over to you from a commercial standpoint.
For sure. An out-of-the-box opportunity has got to mean that you can stand this thing up quickly.
Yeah.
if a credit union or a community bank elects for that kind of deployment model, what's the timeline look like from start to first member or customer using it?
A day. You could sign
Wow.
a contract and go live. That's the problem with, second time founder, you learn a lot. Where when I was first time founder and I felt like we had 600 customers and we had an implementation queue of 60 financial institutions and you got paid
Right.
on when people went live, that was a bottleneck from a cash flow standpoint. Right.
Yeah.
And so
Big bottleneck.
understanding when we go out to build a solution, you can sign a contract, go live, and we don't have this huge implementation queue. That was one thing fundamental when we went to go build Onsetto from scratch.
So you knew that going in. You said if we're going to do this, part of this is I have to eliminate this implementation process.
Yeah, yeah, because the implementation process also gets bogged down on the credit union side because we have to schedule all these calls, and then
Yep.
it's like, okay, we want you to talk to online banking. Okay, that's another call. Okay, we want you to talk to our core. All right, that's another meeting. And so now you're trying to set up biweekly meetings to get somebody. I'm like, we just got to control this end to end. Where you want to move forward, we can get you live. Now, I think from an implementation standpoint, if we have to train, commercial staff on how to
Mm-hmm.
position the product and use the product, that's what I think the implementation will likely look like for us moving
Right.
forward, to make sure, the bank or the credit union staff is using this as a competitive differentiator, not necessarily just another tool that's out there that nobody's using. Because you're seeing that a lot in the market where banks and credit unions keep investing in technology, but you look down the road and none of their members are using it. Well, why aren't they using it? Well, they probably just don't even know it exists.
Yep. Yeah, I had a credit union CEO refer to it as shelfware. Right, there's a lot of shelfware out there. It sounded good when they bought it, and then they failed to do the implementation.
Yeah, and ClickSwitch, that was a huge issue with us back in the day. Is we were signing credit unions at a rapid pace, boom, 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 and then we get them live, and then 3 months, 4 months in, I get a call from the person who bought it and said, "What is going on? Nobody's using it." I'm like, "Well, where does it live? How did you introduce it? Okay, you put a flyer in a branch. That doesn't mean your member is going to pick up the flyer and say, 'Hey, I want this product.' How
Yeah,
are you positioning it in the grand scheme of all your other products?" And so we
that's
had
right.
like a messaging implementation type experience with a lot of our new customers towards the end of like, you're not just buying it, this is how you're implementing it, and this is how you're introducing it to your member base. And that's when we started to see the growth on ClickSwitch. Because I think a lot of credit unions and banks are just programmed to say, we're buying this,
Yeah,
and then where does it go? Like, if
right.
you're not putting it in front of your customer or member base, then they don't even know the product exists.
That's a great lesson from for fintechs is it isn't just about inking the sale, right? It's about on that entire onboarding process for the customer. In this case, for the institution you just sold it to, how do you help
Right.
connect? How do you help to connect them to the ultimate end result that needs to be achieved?
Well, and then you start dealing with customer churn, right? You have people
Mm-hmm.
canceling contracts because they didn't see any value of it. And then you have
Right.
other people who are renewing their contracts because they saw so much value out of it. And how do you get everybody consistently on the same page of seeing value? Like, that's what's really difficult is, we were dinged when from every customer who terminated their
Mm-hmm.
contract. It's like, I got to understand what happened. Why are they terminating? Well, they couldn't get any usage. They couldn't get their members to use the product there. They couldn't get, so on and so forth of all these issues. But usually it just came down to
Yeah.
we bought something that we couldn't get anybody to actually use.
Yeah. Is that part of the algebra then that in your mind when you said I'm going to be looking at, expanding the go-to-market team
Yeah.
a little bit faster than I do the engineering team? Is that part of the calculus?
Yeah, because I don't care right now. We could go out and sign 100 banks, but if we don't have a ton of commercial accounts using our product every single day, then we have nothing. And
Yeah.
so I fully understand this go around the importance of one, there's a lot of fintechs out there that gloat like, oh, I just signed this credit union or I just signed this bank. Well, how many users are actually going through this platform? How many people are actually using this service? And that's what I'm really focused on this time around is one is you get it sold, and then two, how do you deploy it and how do you ensure they see tremendous value out of this moving forward? Because the bank or the credit union, the customer is your biggest advocate moving forward. If you deliver something to them that they're seeing great usage, they'll tell everybody about it and they'll be a great reference for you.
Yeah.
So that's where all the value comes in. It's not just getting the logo, it's delivering on the logo and making sure they see value out of it.
It's almost, it just occurred to me, it's almost like two sales, right?
Mm-hmm.
One is the sale to get the contract signed, and the other is to sell the team on how to use it, right?
Yeah. Well, you have a huge, B2B is hard. Direct to consumer is even harder. And when
Right.
you're dealing with this in this motion, we're really going B2B to C. And so you have to go B2B to get it sold. And then you got to go B to C to make sure the credit union's members are using the solution. So it is very difficult, but going through it once before and coming back again, I think we're more prepared to go about the B2B to C method this time.
Did you ever try, some people will, some organizations will try to sell a B2C product and then pivot to the institutions to sell and ultimately say, that's too difficult. Let me try B2B. Did you ever try to do B2C with ClickSwitch?
Yeah, when I first built it, it was more of a B2C model. I was looking at it more kind of like a Mint type solution of, let's get all of it, Rocket Money now exists and all that. That was the original idea around ClickSwitch, was helping customers update their account information or all their auto pays to be pulled out of their new account. But it was so difficult. And then once we figured out, and so when we tried to go then B2B to a credit union and to banks, they would say, hey, this is cool, but we don't want money coming out of their account. We need money coming into their account. Can you do direct deposit? And that's when we really started to take off, is when we figured out that direct deposit piece. But yeah, it did start as from because you think as a consumer and you think about what your consumer pain points were or are. And I have all these auto pays set up at my old bank, and I just opened up a new account. Me as the consumer, how can I update this information? And so you're thinking that from a consumer standpoint, but it's so hard to launch direct to consumer companies. I enjoy a sales process. I enjoy allowing institutions to help steer your roadmap, so you're actually building something that people need and want. But yeah, direct to consumer is so hard.
Interesting. How did you approach fundraising differently this time than last time? The answer to this question might be really easy. But one of the things I was interested in is, this is your second time around, your second dance. What did you learn about fundraising?
I think you need to be more strategic around who you're getting a check from, making sure that your early shareholders buy into your vision and buy into who you are and what you believe in and what you want to go accomplish. And that was the one, big reasons why I was ready to sell ClickSwitch, is from a board standpoint and from an investor standpoint, there was just so much that you're dealing with there that you lose track of your customers. And I think if I could have to do it over again, it would have been slow down on the raising side. Don't worry about outraising yourself, because we were raising in 28 and 2019 when it was grow at all costs. Just go burn as much money as you can. But if you're growing revenues 100% a year over year, you can just keep growing. And that
was the goal more than anything else, right?
Yeah, because they just wanted more ownership of your company. They wanted to write you another check. Where this time around, and just to be blunt, right? This time around, be more strategic around who you're raising money from. Be on the same path of what is this goal? What do we want this company to look like 5 years from now or 10 years from now? And making sure everybody buys into that vision. If one person wants to write you a check, multiple people probably want to write you a check. So don't just go out and be rushed to take that first check that is offered to you, or the first term sheet that's offered to you. Because one thing I will say is, I was so focused on our shareholders at ClickSwitch and making sure that I got validation from them and making sure that they were happy, that I lost track of what our customers wanted. And I missed going on customer calls. I missed doing prospect calls because I was constantly worried about our shareholders and producing a return to them. But I will say, when I went to sell that company in the day that all the wires hit to all of our shareholders, maybe 2 of them wrote and said thank you. they get their money and they're just usually on to the next deal. But the customers that are reaching out and saying, congratulations, I'm so happy for you guys.
Right.
You're such a great team. So this time around, like I'm way more focused on what our customers will think and
Yep.
who you're really trying to please this go around will
Yeah.
be our customer base.
And with your faster, much faster implementation opportunities, then you can move to, earning revenue much more quickly, right?
Yeah.
Take some of that pressure off of it. Um, that's really fascinating. So many so many fintechs and first time fintech founders are trying to grab at any money they can get
Yeah.
to build up there. And I think it's because they're still being informed by the old way of, that the fundraise is the validation and not the usage and sale of your service.
Yeah. I mean, it's a life cycle out there. You have venture capital who are going out trying to raise money from LPs and saying we're unique because we're doing this, this, and this, and they're constantly trying to raise money. And then you have all
Right.
these fintechs out there that they're trying to constantly raise money from the VCs, and there's just this ever-going cycle
Right.
of just really be strategic. I think on who you're partnering with because it makes the business so much more fun moving forward if you're in it with people you truly want to be around.
Yeah.
And it makes a big difference from when you get burnt out. Like I was completely burnt out at the end. Like when
Yeah.
Q2 acquired us, it was a 6 month grind from when we got our term sheet to when we announced the acquisition when that deal closed. And like on day two after the acquisition, I was like completely burnt out.
Yeah.
And it was hard to figure out like what do I do next? What should I do next? Should I stay on at Q2 and work there, or do they see value in you as an individual, or do they just want your product and your company? So you're constantly like going through these life cycles of what do you do next, and how do
Mm-hmm.
you know what's your identity moving forward? That's a big challenge as well.
Yeah. Yeah. No, that's really interesting. Um, Talk about building your team. We talked about when to hire, but talk about what's your approach to building a team. You said I want to work with people that I want to be around, right? From that,
Yeah.
that's true from an investor perspective. It's also true from a teammate perspective. Tell me a little bit about your philosophy on team building.
Well, right now it's all technology. So just really great technology minds. Do they believe in you from a product standpoint, from a vision standpoint? There's so many like meetings you're on internally, and the day can get by so quick. But
Mm-hmm.
like the team that is working on Onsetto right now, we can have a 30-minute stand-up call every morning. We have a call from 8 to 8:30 a.m. and everybody's just laser focused on what we need to get done. And then we meet the next morning, and there's calls that happen throughout the day. But the team that I'm working on right now is so aligned, and we've worked together in the past where I know this person is going to be able to execute and deliver on this piece, and I need to execute and deliver on this piece, and we'll come back together. This thing's moving very quickly. So there is some key attributes that you look for, but right now I'm surrounding myself with people that we've worked with in the past who I'll deliver for them and they'll deliver for me. But as this thing continues to get bigger, there's going to be new folks that you're bringing on that you've never worked with before. So what do you really
Right.
zero in and look for? That's time will tell on that because it's a whole new market too when
Yeah.
it comes to product and engineering. But it is kind of like the key characteristics of getting the team that landed the plane back together, and we gel pretty
Mm-hmm.
well together. But where this thing's going to look like a year from now, I have no idea. Is this going to be a 50-person company, or is this going to be it's still the seven of us rocking and rolling because we complement each other so well? We know we can
Right.
get it done. That's what time's going to tell.
You're one of the folks who have been on the podcast who have, as you mentioned, this is your second time around, right?
Mm-hmm.
Um, I want to talk a little bit more about ClickSwitch if you're open to it, right? And
Yeah.
that is, tell me a little bit about how did you know you were ready to be acquired? You talked about being exhausted by the end, so maybe that's an indicator, right? But how did you know you were ready to be acquired? Did somebody knock on your door? Did a leprechaun full of gold knock on your door and be like, Cale, it's time, right? Or how
Yeah.
did you know it was time?
But we had a conflict towards the end because my main investors, our venture capital investors, did not want to sell the company. I wanted to sell the company. And, there's this thing that from a CEO or entrepreneurial founder type thing, you get into board meetings and you don't want to lose confidence of the board, right? And so you tell them all these good things that are happening and how you're growing and how, you have no employee churn and no customer churn, revenue's growing great. So part of it was my mistake for then coming to them and saying, then, hey, I'm ready to sell the company. They're like, why would you want to sell the company? Things are going so great. You're growing like crazy. You're adding all these new customers, these new logos. But I saw it. I saw competition was coming, and I saw our margins were getting compressed significantly. Like when we first started ClickSwitch, to just put it into perspective, like when we were charging, a credit union for somebody to switch their account, let's say it was $25 a user. Towards the end, we were getting like $2 a user. And so I'm like, all right, so we have to do X amount of more consumer switching than we did a year ago because all of this competition has come in and our margins have gone like this. Yeah. And they're, from a pricing standpoint. And so when we had a lot of good logos, and so when it was time to go sell, I thought that was one of our biggest strong suit, not necessarily our revenue and our growth and all that, but like we have a ton of good customers that are using our product that you could cross-sell your services over to if you were to acquire us. And so I thought the cross-sell was the most valuable thing. So when we got our first offer, and the other thing you don't want to do, and you don't want to act like there's a for sale sign in your yard, else nobody wants to buy it. So
that's right. That's right.
Usually this thing starts from a big company like a Jack Henry or Fiserv or Alchemy or Q2. They start reselling your product and they start getting a little bit of success around reselling your product. And then like any business people, they say, how do I make this all mine? I got a little bit of margins here, but how do I make it all mine? Right. And so they started thinking, how do I make it all mine? And I knew that I didn't really have the support of the board to go sell the company. So first things first, and I was told them, like I had these conversations with them sidebars, like I don't think I have the support of the board to go sell the company, but if you want to give me a term sheet, I have a fiduciary obligation to go take this to the board.
That's right.
And so we got our first term sheet, took it to the board, and they said, no, don't do the deal. Because it was half cash, half stock at that time. And nobody can predict where the stock market's going or what their stock's going to do. And they were like, I'd rather have 100% ownership in ClickSwitch rather than half cash, half stock. It's something that I can't control anymore. Right. But what we did is we took that term sheet and then we pretty much shopped it around and said, we're seriously considering doing this. And then that's when, the conversation with Q2 started and they came in with just an all cash offer. And still the board was like, I don't want to do it. And then finally I was like, you're going to have to find a new CEO because I'm done. If you're not going to take this deal, I'm telling you everything is going to happen and I'm forecasting it for you. And then finally they were like, if you want to do it, you can do it. But I think I burned some relationships over that. But I will say years have gone by. I have talked to, one of them who called me and said, you know what, you made the right decision. Like we didn't talk for years after that. Like he didn't exchange. And then they finally, because, tech stocks got smoked. So we got acquired in April of 21. Tech stocks got smoked. And then it became very hard to raise venture capital dollars after that.
Yes, it did.
So I got probably the painful, you were right. But you never know. And selling your company is so hard. Like it's hard to find somebody that would like see value in it and acquire it. And so when you get an offer, I think you got to take it serious from a founder standpoint, because you got to understand from the VC standpoint, they're in a 10-year fund. So let's say they make an investment today on a new fund. They want you to grow for 10 years because they don't have to produce the return for 10 years. So they're just like, stay in it, stay focused, and just grow.
Press. Right.
Exactly. Yeah. But as the founder, you're like, I have a family, I have kids. I want to make sure everybody's taken care of because we put everything into this. So how do you know when to sell is probably when you get that first offer. You should probably entertain it because you don't know if another one's coming around.
That's right. Are there things that you would do that you've done differently with Onsetto, structurally, operationally, or that perhaps a founder of another fintech should consider doing with an eye toward that in the future. Like you're thinking about saying, you know what, I didn't do this early enough, so I had to, that slowed down the process when I was ready.
Yeah.
Is there advice like that you would give entrepreneurs who are building a company with toward that end?
Yeah, I think from a legal structure, make sure you're incorporated correctly. Like when I started ClickSwitch for years, I just had this Minnesota LLC that when we went to go raise money, then they're like, you need to set up a C-Corp in Delaware. And then, there's something called QSBS, which is you've got to hold an asset for a certain amount of time, and then you earn tax on it if you were to sell. So I didn't get that, even though I had ClickSwitch for years. I didn't start the QSBS timeline for years later, so I didn't qualify for that. So right when we started Onsetto, it's like we're a Delaware C Corp. We're starting the timeline right now, or the shot clock right now. So there's all the organizational structure thing. I think there's the the cap table structure is very important. Shareholder rights is very important. Who owns your stock, making sure it's very clear that you have very good shareholder rights moving forward. But as a first-time founder, you don't really,
you don't think about any of those things.
Yeah, it's hard to forecast if you're going to be successful or not. So you try to save cost because you're like, I don't want to spend all this money on something that I don't know if I'm going to create a valuable asset or not. Well, this time around, I'm like, we're going to make this a viable asset. We got to protect it right from the get go. So there's that, and then there's all the technology that we're building. When I had ClickSwitch, I felt like it was always built on peanut butter and toothpicks in a way. From a technology standpoint, it's like if somebody blows, is the house going to fall over? So from a technology infrastructure, we're much more sound. When we go to build, we focused on getting SOC 2 right away rather than making SOC 2 a compliance burden. You use it as an opportunity to build all your thresholds and your data privacy and making sure your entire product and organization is set up correctly. So that's been the big thing from a technology standpoint. Building it from it's like building a house. You pour the foundation and you go from there. If your foundation's cracked, you're always going to have problems with your house. So making sure we had a solid foundation and then going up from there has been the learning point, I think, this second time around.
Is there anything you would have done differently in the exit, or that you will do differently in the exit one day for Onsetto versus your first startup?
I think I would have looked after myself a little bit more when it came to selling the company. I was looking after our shareholders and our employees. And then the day before we got acquired, Q2 gave me this fake employment agreement with a made up title that was like, here, take this, and I just if you don't sign it, I don't know if we're going to close. And it's like the day before.
Yeah.
And so you have everybody's banking on the thing to close. And so you sign this piece of paper, and then, 2 years, I signed on for 2 years to.
That was in the agreement that you got at the last minute.
Yeah.
Wow.
Yeah. And it was essentially like they would just cut a dog's tail off 1 inch at a time rather than just severing it right at the beginning. It's a bad analogy, but that's how I felt for 2 years.
I felt pain from it. So just the concept of it.
But a lot of people had good homes and they're still there, and good for them. I didn't feel like I really I didn't have a personal chance to succeed there post acquisition because when you're absorbed really quick, that's
as a founder, you're also a creator, right? You're looking for an outlet. You're looking to be able to do something different, to follow an idea, to pursue and build a vision. That's hard to do when you get acquired and you're part of a larger company.
Exactly. Yeah. And there are a ton of smart people there, and they made their decisions that they wanted to do as far as where they wanted to live and how they wanted ClickSwitch to go. And that's great. But you're seeing more acquisitions since then where Alchemy acquires Mantle, right? They don't touch it. Mantle is still Mantle. And I think if I were to go through it again, it's like, we're going to go through this acquisition, but you're just not going to absorb us quick, or else you're going to kill revenue. You're going to kill the logos. You're going to kill everything. So my advice second time around would be I believe this is the right deal. I believe this is the right home, but let's acquire it and then let's leave it run as its own entity for a while until the shock and awe is gone.
Yeah. No, that's fantastic. Cale, if a credit union or community bank is interested in contacting you, learning more about Onsetto, how do they reach you? How do they find out more about the company?
Yeah, so you can go to our website, onsetto.com, onsetto.com. You can schedule a demo there on our website, or you can just email me, Cale, Cale, at onsetto.com. I'd love to jump on a call with you.
Yeah, and sounds like you could be live really quick. So, my friend, thank you very much for joining us. I thought this was a really great conversation, and there is so much here for founders to learn from you. Thank you so much for sharing.
Yeah, thank you. I appreciate it.
Let me just say that interview should be required material for every single first-time fintech founder. What Cale shared with us was absolutely unbelievable. And I think it really speaks to why this podcast is so very important in our industry. Cale, thank you so much for everything you shared. Was absolutely fantastic. If you like this material, please like and subscribe on your platform of choice. Check out our LinkedIn page for bonus material. Thank you very much for being here. We will see you next time.